I'm Dan Fitzpatrick at stockmarketmentor.com. Look, if you're a hardcore trader like me, when you get up in the morning and go into your office, one of the first things you do is turn on CNBC. Okay, you see Squawk on the Street, you see Opening Bell, you see Power Lunch, Closing Bell, Fast Money, Mad Money, you see it all. And the one thing that rings true on every single day is there's a lot of stocks to be looking at. Well, you can't look at all of those stocks, so guess what? I do a lot of it for you. In this video series, 3 stocks I saw on TV, I talk about basically 3 stocks that are topical, 3 of the ones that I find to be most interesting. So today, we're going to look at YHOO, Valiant, and Alliance Data Systems. First, YHOO. Here's the deal. It was big news on Friday here that the board is exploring options. Now, they've been exploring them for a while, but it's big news that they actually are exploring options. I think the deal is you got Marissa Mayer, did a really nice spread in Vanity Fair, maybe it was Vogue or whatever it was. Very sexy CEO, right? Hadn't really helped the stock price, though it has helped her profile. Look, when they ditch her, and ultimately they will, she's going to get like a 9-figure parachute, which is really pretty nice for her, not so much for the company. But look, this is the deal. You want to be selling into strength like this, not shorting, because they could come up, somebody could buy them, whatever the case may be, and you can bet that if there is some type of deal to be struck, it is not going to be a deal that's going to drive the price lower. I mean, it's just not going to happen. So the only way some kind of deal would be moving the stock, it would be in the upside, in the upward direction. When you look, though, we got to stay true to the technicals. When you look at the weekly chart, you can see, frankly, a pretty nasty head and shoulder pattern here. First of all, let's just draw the line here. You're going to look at a left shoulder, a head, and then a right shoulder. So the stock looks to me like it's ultimately going lower. Again, unless somebody does something that so far nobody's been able to do. So I would just say, if YHOO comes up into the low to mid 30s, if it comes right back up here, if it comes right back up here to about the 200-day moving average, I think that's when you want to get rid of the stock. It just to me seems like a real risky trade, but don't be selling now. Let the stock come up more, so at least you got money. Okay, the next one, Valiant Pharmaceuticals. This stock has been absolutely crushed, much to Bill Ackman's chagrin, and it's even lower now. Turns out Wells Fargo issued a warning, and they dropped their valuation to an area that's not even on this chart. 65 to 68 bucks is really where they say is a nice area to buy this stock. But here's the deal. Like YHOO, this thing has been trending down for a while, including here. So you've got this sideways consolidation right at about 85 bucks. This stock is not heavily shorted, not at all. If this stock starts falling lower, I guess you could give it till 80. But I'll just say, if it starts falling to 83, 82 bucks or so, I think you can short this stock as long as you have a buy stop. In other words, if the stock reverses, you're going to buy the stock back at a certain point. I'd say a little bit even below 90. This is a really tight trade. I'm giving you really tight parameters, but it is that kind of market. What I want to see you doing is I want to see you selling the stock as it falls down out of support, because if Wells Fargo's right, you're going to have a nice 15-20% return in a fairly short period of time. Okay, then the last one here is Alliance Data. Now, Kramer was talking about this company yesterday on Mad Money. This is a company, they're essentially a marketing strategies company, loyalty cards, stuff like that. Look at the weekly chart. Okay, this stock, forget about all this here. This has been like Icarus. After breaking out in 2011, I mean, the stock went up almost 300%, and all of this could have been a high base. Stock consolidates literally for a couple years and then goes off to the races again. Well, that didn't happen. just as a general rule, frankly, stocks that do this over multiple years and then do that don't often do that. Sometimes they do, but this is generally not the pattern. It's kind of like, okay, the thing ran its course, competition, excessive success brings out competition. It's undoubtedly what's happened here. I think this stock is just oversold. I would agree with Kramer, certainly agree with Kramer that this is a buy right now, but for different reasons. Jim likes this because he thinks it's a value stock. It's at a good value now and all that. Okay, that's fine. He thought that again. This was on Thursday when he mentioned this stock. It closed up, 3.5%. Not that big a deal. But I can see this stock going up, maybe even to try to fill the gap. That's about 10%. I think you can buy this stock right now, but only because it's really kind of oversold. Still, when you look at it on the weekly chart, this is still an oversold stock that could likely rally higher. On the daily chart, you can't really say it's oversold. You can say it was here, and then it's just working off that oversold level. So buy this. Nice little tight stop. We'll say, oh, well, let me just draw it out for you. I'll say 5%. Put a 5% stop underneath this, and then when this starts hitting 225 or 230, that's when you really snug up your stop. So you're writing this up, but don't be a true believer in the stock. I get Kramer's value trade. I'm just looking at this as a stretched spring, a stretched rubber band that's now reverting to the mean. Okay, that's it for these three stocks I saw on TV. I'm Dan Fitzpatrick at stockmarketmentor.com.